This is another episode to be documenting the day-to-day process that I'm taking to achieve long-term consistency in the financial market. And this is going to be a weekly review, reviewing this week, a small red week. I'm only down 5.25 points or less than 1 hour. Or if you want to think in terms of dollar amount, which I am not, $40. So, not a terrible week, right? Obviously, it's a red week, but I'm basically break even. No damage done, which is good considering that this week and this market condition was extremely challenging for me. And I'm sure a lot of you can agree in the comments sections. Y'all been dropping comments are like, yeah, man, this week has been tough. Like these conditions are pretty rough. And it's the same all-time high condition that we've been seeing over and over and over again. When the market approaches all-time high, it just keeps going up. It just keeps going up. And for me, that doesn't make sense. The way that I trade, I keep trying to fade this thing and I keep trying to look for lower prices based on the way that I see the market, the concepts that I trade, and the model that I've developed. I keep trying to fade that. And that was the issue with Thursday and Friday this week. I was simply on the wrong side of the market. Wednesday, I was actually bullish, but Wednesday was the only down close candle that we had this entire week. So let's get into it. So if you go to my notebook, if we go to session recaps and we look at September 8th to September 12th, 2025, I only had 3 trading days, right? Because what I'm trying to do is focus my trading around the days that are going to be high probability, which are going to be days with the injection of volatility. Those are the days where price usually has large swings, which is how I'm trying to trade. I'm trying to catch large intraday swings in price that yield a high R multiple setup, which is why my model and the way that I trade is a low strike rate kind of way of trading. If you look at my win percentage, it's only 28%, right? But I'm still up because of my average win to loss. So that's kind of how I'm trading. So I'm primarily focusing on the high probability trading days, which means if there's no injection of volatility on the economic calendar, I'm not going to be trading that day because it's probably going to be shitty. It's probably going to be sloppy and real slow, and it's not going to offer that large intraday swing. So I eliminated Monday and Tuesday because I know that the days before CPI and PPI that don't have a news driver at all are probably going to be those low probability trading days. So I eliminated those days and focused on trading the days with that injection of volatility. Now, even though I did that, the days with the red folders, the days with the economic events, they were still low probability trading days in my eyes, at least, because the market was just very high resistance this week. If we look at a 1-minute chart real quick, let me just pull up a 1-minute chart and I'll explain to you what I mean by high resistance. This is a 1 minute, right? So this is Wednesday. Basically, what you're seeing here is what? A freaking barcode, right? If you look at each candle, it basically overlaps the previous candle's range, and there's not a lot of separation between the candle's ranges like we see here. Like we see how this large separation from this candle's low and this candle's high that leaves this gap right here. Not really seeing a lot of that, right? A lot of back and forth, a lot of high resistance movement. And this was the same characteristic that repeated in price every morning session this week. So it was definitely a more challenging week. A lot of you guys have been saying that in the comments, like I said. And despite the challenging condition and despite my inability to adapt to that and read that and trade with the trend and do what the market is telling me to do, I just had a small losing week, which is good in my eyes, because usually on a week like this, I would have a really, really large losing week because I got the bias incorrect all 3 trading days. And usually when that happens, I have a really, really bad trading week. But that's not the case this week. I showed a really strong ability to prevent losing trades. So I'm going to walk through this week's session recap. Now, the things that I'm highlighting in red are the statistics, my baseline statistics that tell me how my performance was for this week. Things that I'm highlighting are my win to loss ratio, which is, let's go to this week, which is 1.35, right? If we exclude the break-even trade from Thursday, I think that's why it's different in my weekly review, but it's 1.34R, right? Let me change this real quick. So my win to loss ratio is 1.34R, which means I was not able to capitalize on winning trades, or I was taking larger losses than wins, which is true because the only solid setup that I took this week that I got filled on, I was trading in the wrong direction. So obviously I'm not going to be able to hold a runner for that position. How I typically trade on the eval is I will take 3 micros. I will take off 2 at a low hanging fruit objective, which is what I did here. And the last I will allow to run. Now in this case, I'm trading in the wrong direction, right? So I have to secure equity fast, and the 3rd contract gets stopped out for break even. So that ended up being a small winning trade on Friday. And on Wednesday, I ended up taking 2 losing trades. I think it'd be more beneficial if I just go through each daily review. So when I'm doing my weekly review, all I'm doing is looking back on my daily process. This is the same things that I follow each and every trading day. It's this template that I fill out. I've created a template here called daily data, right? And I'm just filling this out on a daily basis. And I'm just repeating this. And this allows me to connect the dots, review my thought process, and figure out where I'm going wrong and where I'm going right. If I have a good session, I know exactly why it was a good session. If I have a bad session, I know exactly why it was a bad session because of this process that I do right here. And this is the data that you're going to collect on a day-to-day basis. If you watch my video on the process breakdown that I have, I explain everything here. So I repeat these things on a daily basis. And at the end of the week, I'm going back and reviewing these. And that's going to allow me to create a weekly review, which really allows me to pinpoint what happened that week. Now, the main constraint from this week is going to be in the overview of the weekly review. So how did I hold myself back this week? It was basically just getting the approach incorrect all 3 days. But on Thursday and Friday, I was deliberately going against the clear bullish condition simply because it did not make sense to me. So I hunt the sell side low resistance liquidity run. Like I said earlier, the condition is what? We're just going higher. And I'm trying to make sense of that. Like, why should the market go higher? To me, it's not making sense. So because it's not making sense to me, I'm looking to fade it. It's a tough situation. It's kind of hard to explain, but it doesn't make sense to try and fade this thing when the market is at all-time highs and we're clearly bullish. It just doesn't make sense. So on Thursday, if I go to Thursday's approach, I deliberately ignored the fact that CPI traded down and cleared these lows, and I thought the market would trade back down to this level simply because we had a down close candle on Wednesday. So if we look at the daily time frame on Thursday morning session before the 9:30 open, because I'm creating a pre-market approach here, we had this down close candle on Wednesday, right? So because we had this down close candle, I thought that would be the high of the week, and Thursday and Friday would trade lower to take Monday and Tuesday low. But that was not the case because we're bullish on the higher time frame. CPI trades down, which is exactly what you want to see, clears the sell side here, and that allows the market to run to the all-time high Thursday and then finally reaching it on Friday. So reviewing the market approach, it's what the conclusion I came to for the number one reason why I'm holding myself back this week, which is simply getting the approach incorrect, which is, if you've been following me and watching my videos, the number one reason for all my bad trading sessions. So bias is something that I really have to work on, but I haven't been working on it because I have this problem, and this is outside of trading. I start a lot of things. I do a lot of things. I work really hard. I work all the time, but I never take anything to completion. I never finish it. So I was working on this intentionally because it's the same issue that I discovered at the end of August. This is my August monthly review. So if I look at my action plan for next month, I should be aware of my tendency to want a low resistance liquidity run when creating a market approach. This is the reason I was getting market approach incorrect, but this is the number one thing that's been holding me back, and I still have not corrected this mistake. It's bias. I'm not good at bias at all. And because it got bias incorrect 3 times this week, just because it did not make sense to me because the market is going higher, this made a losing week. Now, if we go to Wednesday, the reason that I lost on Wednesday was overconfidence. So if we go to my daily journal, we can see that I can't make any reasonable assumptions this day should close lower because it's not setting up as a sell template would. It's not opening near the high day. I see the smooth sell side from the overnight session, but that's one piece. I have to assume lower prices, mean against mean for it to want to, okay, that doesn't make sense. But basically, I was looking to be a buyer on Wednesday, right? Now, the first trade that I took on Wednesday, and I can literally just pull up the session recording. These are all the things that I record. So all the mistakes that I made, they're known, they're here, and they're recorded. If I go to videos, if I pull up 9:10, we can see exactly what I was looking for. You can see my annotations from the chart. I would want the market to draw back to this level because I have that bullish bias. So what I was looking for is to clear the PPI low, trade into the hourly inversion fair value gap, and then show me a reason to buy it. Now, I was extremely overconfident in my bullish bias because it was giving me everything that I needed to see to want to target this level right here. Like, this is perfect. You see this really smooth level, these really smooth highs. There's going to be buy side resting above those highs, and that's exactly what I target. So I was really confident in the idea of higher prices, and this led to a premature entry where I bought the market before I ever had a change in the state delivery. So my entry model that I'm using is changed in the state delivery, where either the market violates the open price of a series of down close candles when I am bullish, or it violates a sell side imbalance, buy side inefficiency in the price leg that removes liquidity from the marketplace. So the key factor for a change in the state delivery, for me, it has to remove liquidity from the marketplace, or it has to be in reference to and indicate respect of a PD array. In this case, I have that, right? Or it would have been a change in the state delivery, but it was never validated at the time because this consecutive series of down close candles goes below this low, and it trades into the hourly inversion fair value gap, right? But is the open price of this consecutive series of down close candles ever violated? It is not. So on the first loss, I see this large up close candle coming back inside the range. I'm extremely overconfident in the idea, and what do? I jump in before I ever have a change in the state delivery. I wanted to see this little separation inverse right here, meaning the up candle should have laid a body over that. So that's confirmed the change in the state delivery. That never happened. In fact, it traded up into it and closed below it, which is a sign of weakness. So there is never, ever, ever a change in the state delivery. There is no discount array for me to even execute on here. It was just simply a large up candle on the 1 minute time frame that I was buying. I don't even have anywhere to frame my stop off of, so I just place it down here, risking $111 on the trade. This is the largest loss that I took this week. This was the worst trade that I took this week, and I never had any confirmation. Because I don't have any confirmation, I'm jumping in on this idea simply because we have a large up close candle coming in on the 1 minute time frame. Now I have literally nothing to frame a stop loss off of. Now I'm risking more on the trade. So all in all, really bad trade idea. Now the second trade that I took on Wednesday was not terrible, because now we have, again, consecutive series of down close candles, takes this low, so it removes liquidity from the marketplace. As soon as the open price of that is violated, then I'm looking to be a buyer. In this case, it just didn't work out. So it's not a terrible entry, right? And those are the two losses there, and I stop out, and I'm done for the day right then and there. Now the setup, the long that I'm looking for, comes shortly after I stop out on the second losing trade. But had I not taken the first trade prematurely and just waited for this, then I would have taken a loss there. Yes, still, I would have taken a loss there. But by the time the market actually confirms a reversal, I can go ahead and take a second attempt at that idea, because I have a rule that states I can only take an idea twice, which is why I saw the confirmation for the long here, but I can't take it because I have a rule that states 2 attempts on one idea. That's it. Do not violate your rules. I stay disciplined to my rules. I'm following them at all times. Therefore, I don't take this second attempt on this idea. I walk away for the day. I'm done. I have to walk away with the mistakes that I made, accept that, and grow from it. So I know exactly what I did wrong, right? I was extremely overconfident in the bullish bias. I executed a bit prematurely, and that is what led me to take 2 losing trades before the market actually gave me the reversal that I wanted. But still, even then, this probably would have only produced the ability for me to take partials, maybe like 30 or 40 handles, because it just fell into this consolidation, could not get over this gap right here, and then it rolled over in the PM session and ended up closing as a down close candle. This actually offered my premium gap opening setup in hindsight, but I was not able to catch that. I was focused on longs, looking for the market to deliver all-time high. So if we look at what the market looks like when it closed, we actually got a large move lower, cleared the sell side that I thought I was not going to trade to. I was aiming for all-time high, didn't do that, cleared the sell side here. Now Thursday, let's give a brief overview of every single day. What happened on Thursday? Note how I can go back and literally explain to you guys exactly what I was thinking before the session and after the session, and everything that I learned and everything in between. It's because of the process that I'm doing right here. This data collection really allows me to grow at a fast pace. So Thursday, I'm going with the idea that the near-term condition is more of a consolidation. Yesterday's close does not signal strength, and how Monday and Tuesday are small range days and price is up after CPI. I'm thinking the high of the week could be in yesterday, or we're close to it. I'm not looking to buy it. So in this case, I'm looking to be bearish, right? My daily bias was bearish, and that was also incorrect. But if you pull up the session recording from Thursday, I had a pretty solid trade idea because this was looking like my bearish premium gap opening setup, where basically the market just opens at the high day after we have a gap up opening. If I go through the screenshots, let's see if I can explain this well with the 15-minute. Okay, so this is the 15-minute from Thursday before the market opened at 9:30. Notice how we have a large premium gap opening, which is basically the difference between where we settled yesterday in regular trading hours at 4:14 p.m. Eastern Standard Time and where we opened today at 9:30 Eastern Standard Time. So we have a large gap up opening. The market is opening at the high a day. Typically, when this happens and the market opens at the high day, what it'll do is it'll open, it'll trade up, make a new high day, fail, trade down, and reverse, make a new low a day. So that's what I was looking for because of how Wednesday closed. I thought we were going lower for the remainder of the week, which is not the case. Ignore the fact that CPI traded down and cleared these lows because I thought there was nothing for the market to grab onto here, which was the main reasons I was bearish. But we do have this large discount wick that we can annotate and use that as a discount array, and that is what the market used to climb higher. But even then, price indicates the respect of the opening range gap. If you look at the 15-minute time frame, once we get that 9:30 open price, we can go and annotate that, and then we can drop quadrants on the gap, and we can see how the price respected the midpoint of the opening range gap perfectly, literally perfectly, right? Look where the bodies stop. These are the things that I'm looking for to frame trade ideas. Stops right at the midpoint of that. But you can see that the first thing that we did is we opened and we traded up, right? If we look at that, if we think about how this 15-minute candle developed, the first thing price did was it opened, traded up, made this premium wick here, and then traded down to the midpoint of the gap. So even if the market was bullish and we had an up close day, I don't have to be right about the direction of the daily candlestick to make money. If I want to make more money, yes, I do have to be right, but I take partials. I'm taking 2/3 of the position off, so I don't have to be right about the direction of the daily candlestick. So when the market's opening here at 9:30, 9:30 is right there. I believe it's this candle right here. And the first thing that we're doing is we're trading up at the high day, and the market is showing me feedback that it's not leaving this gap. Now, at the time, I thought this wasn't the feedback that I was looking for until I got large down close candles that came inside the range. But notice how we have this small consolidation range, and the first thing price does is leave the high of it first. So whenever this happens, it tends to come back and take the low of the range second. So I'm noting this as everything that I need to see for my sell idea. And then as soon as I start to see displacement down back inside the range, I'm viewing this up close candle as a change in the state of delivery because it fails to leave this gap right here, right? We remove liquidity from the marketplace. This is an old high from the previous session, from the previous day. And then I place my sell limit order. I was trying to get in at the open price of this up close candle. Now, had I done that, I would have got tagged in, but I place it just a little too far above it, and the market trades literally up to my limit order, but does not give me fill, does not cover the spread. And then it dumps lower right to the objective that I'm looking for. So kind of frustrating. Not ideal, not optimal, right? It literally just, and then it just leaves. And I was like, God damn it. So this made me pretty frustrated in the moment. I was like, there is no way. You know, I was kind of feeling like, fuck. Everything is getting in my way from taking a solid trade, right? Little things like this happen to you. You start to think negatively. You start to get frustrated. But you can't allow yourself to dwell on that and lament on that and allow that to consume your mind and alter your mental state, right? So I'm noticing the way that I feel, and I'm noting how I'm probably prone to make mistakes because now I'm going to find a way to get on side with this move. But it literally just dropped straight to my target in a couple of candles. So, I mean, it happens, right? It happens. So this would have been a solid trade. And I could have targeted the midpoint of the opening range gap like I mentioned. Let's go to the post-market screenshots. So an easy low-hanging fruit objective would have been half the gap at 23.92400. That would have been a pretty solid trade. But I did not get my fill, so it is what it is. What can you do, you know? So 981 to 24 would have been what, 60 handles in a couple of minutes. It is what it is, folks. What are you going to do about it? The good thing is, though, is I was trying to find a way to get on side with this trade because I thought it was going to fulfill what I was looking for and make a new low of day. But I saw displacement coming on the 1 minute time frame, and I knew not to stand in the way of that. And this is what prevented a losing trade on Thursday, right? So we have, boom, large displacement back inside the range. Not entirely confident with my bearish bias because the higher time frame narrative is overall bullish, and I'm swimming against the tide deliberately. It doesn't make sense for me to know that the higher time frame narrative is bullish and still come into the trading day looking for sells, knowing that we're at the all-time high. It just makes me feel a lack of confidence and conviction in the way that I'm trading because I'm deliberately going against what the market is doing. So when I'm in these shorts too, I'm feeling it because I know what I'm doing. I know I'm trading against what the market is telling me to do. I mean, you really feel that added stress, that added pressure, because everything that you're doing is automatically low probability because you're trading against the trends. This is just something that I really need to work on. So I see this huge displacement come back inside the range, and I'm not standing in the way of that. I get out of the way real quick. Now the second trade, or the first trade, which should have been the second trade had I got filled on that, and that would have been a winning trade. I wouldn't have even taken the second trade at all. I'd be done. But what I'm seeing here is the market runs up, takes the initial buy side, displaces back inside the range, 1-2 large down close candle. I'm noticing the same kind of anomaly that we had here. We had a small consolidation range, and the first thing that we did is trade up. Kind of the same thing here, small consolidation range. The first thing we do is trade up. So I'm thinking about how that hourly candle is going to paint, thinking in terms of hourly power of 3. The first thing that we do is we open and we trade up in the 10 o'clock candle. So I'm thinking, okay, this is actually looking kind of bearish. Is there still a reason for the market to want to fill that gap, the opening range gap that is left open? So I sell short this change in the state of delivery. And when I get tagged in, I know, number one, I'm trading for pattern's sake. Number two, if I stop out on this trade, I'm going to be extremely frustrated with myself because I've already noted intraday that there's no reason for the market to want to trade lower. I go to my live trading notes from the daily journal. I have to drop the idea of lower prices, how price is painting back and forth the 50-minute, and how strong ES is tells me there's no willingness to want to go lower. So despite me noting that, here I am still selling short the market at 10:12. I made that note at 10 o'clock, right? Doesn't make sense. So if I were to stop out on this idea, I would be extremely frustrated with myself because I already knew that the idea of lower prices is out of the picture. If I won on this trade, I knew that I could not be proud of it because I'm trading for pattern's sake here. I'm simply trading because the market ran up above old high and then we had a change in the state of delivery. So regardless of the outcome, this is not a good trade. So what do? I take it off instead of what I used to do, holding on to trades, hoping that I would get the outcome that I'm looking for, a winning trade. So instead of sitting here hoping that the market is going to drop lower, I know what I'm doing. I know what I'm doing wrong, and I cut the trade. So this is what I mean by I showed a great ability to prevent myself from making mistakes that typically lead to a lot of drawdown. And that's what happened on Thursday, not the last day of this week, Friday. So what happened Friday? Let's give a quick little rundown of what happened on Friday. So starting with the daily journal, how I felt. I know this condition was not optimal for the way that I kept trading. And this is when I really got mad and kind of upset with the fact that the market is literally just going higher. And it just doesn't make sense to me. I literally admit that I'm getting in the rhythm of this does not make sense. So I do nothing but fade it. Okay. If I'm aware of me making this mistake in the moment, why not correct that and look to be a buyer for the day and just look to be a buyer because you know it's going to go higher and you know that the market's reaching for an all-time high. Why are you still looking to be a seller? I just did a lot of things that just don't make sense. It just seriously don't make sense. So it's frustrating and I keep swimming against the tide because it makes no sense based on the way that I trade to buy the market where it's at. So what was I doing again? Looking for lower prices. So price has gone higher all week. There's nothing for price to grab onto and climb higher overnight or in previous daily range. Market criteria is perfect for a sell side low resistance liquidity run, but is the higher time frame narrative there? And this is the key thing to think about. How I arrive at bias is combining higher time frame narrative and market criteria. If I'm only trading on market criteria without higher time frame narrative, that's probably going to be the days where market criteria is there for, let's say, for me to be a seller, but the higher time frame narrative is telling me to be a buyer. So the market may drop initially, but that move lower does not last, and the market ends up closing higher on the day, which is what we had here. So review the 15-minute time frame and my pre-market annotations real quick. I was looking for the market to want to fade this trend line that we have right here. So I'm noting that the market criteria is perfect for a sell side low resistance liquidity run because we're already trading above previous daily high. So I want to see it, and we're opening at the high of day, right? And we have a gap up opening. So I want to see the market open at the high of day, trade up, fail at the high of day, and then trade lower, fade that trend line liquidity, fade that, and do a sell side low resistance liquidity run. What I was ignoring was the fact that the higher time frame is bullish. We're reaching for the all-time high. We have protraction in the London session. Look at this large down candle. Boom, that just goes below this low. And then an impulse swing back inside the range. So instead, what I should be looking for is for the market to not fill the premium gap opening or keep it open or indicate respect of it, rebalance this range right here, and then reach for the all-time high. But instead, I'm thinking, no, this just doesn't make sense to me. I'm just going to fade it. Low probability trading. Trading against the trend. Something that I definitely struggle with. 100%. So if we go to Friday's recording now that you have a great, perfect understanding of what I was looking for going into Friday, simply by me reviewing my daily journal. The first thing that the market does at 9:30, this is not 9:30, this is 9:26. So in my playbook, where the market does open at the high day, we do have a premium gap opening. The first thing that it does is it'll trade higher, it'll make a new high day, and it'll fail. So that's what happens here. Market trades up, makes a new high day, fails. We have this large premium wick. I'm annotating it. I'm seeing if the market can respect it. I'm waiting for a change in the state delivery. The change in the state delivery here would be a violation of the open price of this up close candle that has removed liquidity from the marketplace. And we get it there. So as soon as that open price is crossed, I'm putting my sell limit order in to get filled, and my stop loss is going to go above the midpoint of this wick, because if the market is truly weak and truly heavy, it's probably not going to trade to the midpoint of that or violate it. And I'm going to target a gap fill on the premium gap opening that we had. So right now I'm just measuring how heavy the market is, how strong it is through old lows, reading its ability to trade lower so I can properly manage this trade. Now I'm annotating the opening range gap. Right here's where we settled yesterday at 4:14 Eastern Standard Time, like I was explaining earlier. Here's where we opened today at 9:30. We have a gap up opening. The first thing that we do is we trade up. We remove buy side from the marketplace. We violate the open price of that up close candle. That's a valid sell for me. I have valid risk that I can frame off of this premium array, the wick. And now I can look for the market to break lower. So all I was looking for here was a gap fill to trim 2/3 of that position, because I knew I was trading against the trend. So I'm measuring how strong price is trading to the opening range gap low. I want to see if it has a strong ability to leave that and potentially offer more. Maybe I could squeeze a little bit more juice out of this lemon. But I'm noting how it's not looking very strong, and I end up trimming 2 out of 3 contracts. Move the stop to break even, and the last trade gets stopped out for nothing, net change, right? So locking in equity there, and that's the only reason why this was not a larger losing week, was because of my ability to take partials, which is why I'm going to stress the importance of taking partials. Pay the trader, because what I did before was I would trade one contract and I would try to swing that thing for 100 handles, which made it extremely hard for me to make money, because if I'm aiming for that swing every single time, I am demanding that the market is giving me exactly what I want, exactly what I'm looking for. I'm demanding that I be right in my bias every single time. But you see right here in this example from Friday that I don't have to be right about my bias in order for me to make money. All I have to do is take partials and lock in equity and pay myself. That's it. Now, if I don't do that, if I never locked in equity there, and I demand that the market gave me exactly what I was looking for, and I aimed for the whole swing for the objective that I was looking for, which I thought was London low, the market never delivered London low. So what would have happened? That trade would have came back on me, stopped me out for break even, never delivered London low, right? But because I'm taking partials, I don't have to be right about that trade in order for me to make money. So that's it for these 3 trading days. Let's go back to the session review and read the overview. So how did I hold myself back this week? I got the approach incorrect all 3 days. Thursday and Friday, I'm deliberately going against a clear bullish condition simply because it doesn't make sense to me. But how did I grow this week? I actually felt like I did grow a lot this week because I showed a strong ability to keep myself out of drawdown on Thursday when I knew not to stand in the way of displacement and took a trade I knew was not a good trade. Took it off, preventing it from turning into a loss. That was literally the first time that I showed the maturity to remove risk instead of leading myself down the road of hope. So perfect, beautiful. And then I showed patience to sit out 2 out of 5 trading days this week, intentionally trading around the economic calendar, which definitely made this week a lot less frustrating than it could have been had I traded all 5 days. I think trading all 5 days this week could have easily created a large losing week because of the condition was very, very, very low probability. We had a lot of high resistance condition. So I learned how important it is to take partials because it removes the need for me to be right. Now, what are actionable steps I can take to get better and fix the problems that I have? I had to grow my ability to recognize shifts in conditions and trade with them instead of against them. So I got to get rid of this tendency to fade price just because it doesn't make sense to me. So that's going to be it for this one. If you enjoy the process that I have established in TradeZella and you would like to do this for your own trading, I mean, I think it's just absolutely essential to know your data and all your statistics and everything. I have a link in my description in my bio. If you use that to sign up for a TradeZella subscription, let me know in the comments. I will personally help you get set up. You can use code CF10 or CF25 for a bit of a discount on the monthly or the yearly plan. I would recommend going to the yearly. Just save a lot more money, knock it out, and actually commit to this. Commit to your process of data collection and building a system in one software. But everything I do is integrated in here, and this is just something that I really believe in. So if you want to go ahead and check that out, you use my link, and you can help support me, support the channel. But aside from that, that's going to be it for this one, and I'll talk to you guys on Monday.